Hello and welcome to Market Views, a podcast series of Open Business Council and JPFS, where we discuss financial and trading news, interviews with key personalities, and engage with our audience. Now, today we have the second video podcast with Whitehill, Europe's largest liquid hydrogen plant. Today we are joined again by Richard Winterbourne, the CEO of Haush, and Steve Saunders, the director of Arup, the sustainability developers behind the project. Peter Kristensen, CEO of JPFS, the Swiss investment specialist, and Adam Hill, the COO at SGT Markets, Whitehill's custody partner. SGT is a licensed and regulated broker-dealer providing private and institutional investors like JPFS and their clients to invest in the markets. So welcome, Steve and Richard, again to Market Views of Trade Makers.
Thank you, Hilton. And today, this is the second video podcast about Whitehill, which is Europe's largest liquid hydrogen plant. And today, again, we're joined by Richard Winterbourne, CEO at Haush, Steve Saunders, director at Arup, the sustainability developers behind the project, Peter Kristensen, CEO at JPFS, the Swiss investment specialists, and me. So let's kick off and find out a little bit more about how things are going at Whitehill. Peter, first of all, can you tell us how popular has Whitehill proven with the individual investors and the different investment groups that JPFS works with? When do you expect to have secured the investment to allow Whitehill to progress from this stage to the planning stage itself?
Thanks, Hilton, for hosting this, and Adam. I got to say, it's been interesting with all the questions that we actually had, talking to high net worth individuals, talking to family offices, but also talking to individual clients, actually, or investors wants to get into this. The funny thing is, the questions that we've had is, why are you doing this? What is it? And also, what is a PP, planning permission? How can you actually fractionize that? So the questions have been interesting from our part. And when we actually start explaining it, then they start understanding it. What we actually done is we compare this planning permission more or less to an education in itself. Because why does a planning permission cost this amount of money? Because it's not just getting the planning permission from now until 12 or 14 months. No, there's a lot of preparation that actually goes on, and it all takes time and costs money. So what we've done is we compared with an education. If you want to take a master and a PhD, that's going to cost you $300,000 or $400,000 if you do it in the States. Here, it's a bit the same. You get the permission. That permission costs money to do, and that permission actually can be sold later on to a certain amount. And that amount is a lot higher than actually what we paid for that permission. We've secured just around 65% of the total amount of the £900,000. And we have a lot more actually coming in. But we estimate, just an estimation, that we will have it 100% secured the end of month June or beginning of July.
Wow, that's incredibly quick. You must be delighted.
Yeah, it's gone for a new product and a brand new thing. It's actually got a lot more attention. First of all, it's green. It's wind to hydrogen. Everybody likes it. And they can now participate in for a smaller amount.
Understood. And obviously, key part of the overall sort of investability, if you like, of the program is the final off-takers. So as the program gets funded, goes through planning, and the larger investors are onboarded to develop the project, you need to be, the project will be producing liquid green hydrogen, as we said, the biggest in Europe. Richard, last time you joined us, you mentioned that you are already in dialogue with a number of potential off-takers or customers for the liquid green hydrogen. Can you tell us, how are these talks progressing?
Thanks, Adam. It's been very exciting. The talks are progressing very, very well indeed. And what we're able to do, what we've been able to do is to clarify the amounts, the transportation, what we're going to do with it once we get there. So we're working very closely in conjunction with the potential off-takers, and there are, as you mentioned, a small number of them. But taking that a little bit further to the point to say what we actually do once we get it to site, because primarily, as we mentioned last time, this is liquid green hydrogen for the transportation industry. But there's no point in us just turning up with a bucket full of liquid hydrogen and then not knowing or not giving the ability of the clients to be able to utilize it in the best possible way. So we've been getting closer, and we are very close now to getting off-taker agreements, which we hope to be able to conclude by the end of June. But yeah, as I say, we couldn't be in a better, stronger position than we are at the moment. And we're delighted with the response, and delighted with the response we're getting from people around us, such as Arup, to give us the support in the technology to answer the problems and any queries that there may be around the usage of the hydrogen once it's on site.
Thanks, Richard. And Steve Saunders from Arup, welcome back, first of all. Now, last time we spoke, you gave us all sort of a bit of an introduction to the different technologies that this project will harness. But perhaps today, if you could you give us a bit more of a deep dive on the tech stack? Really, how does all these different existing technologies come together to produce 100% renewable green hydrogen?
Yeah, thanks, Adam. Yes, as Peter alluded to, this is wind to hydrogen, but there's obviously a lot of components in between there to make that happen. So effectively, we're looking at 7 4.2 megawatt wind turbines on the site, which will capture the kinetic energy from the wind and convert that into electricity. Wind turbines produce electricity in DC, so that needs to be converted to AC form so that all the rest of the plant can run. The energy from the wind turbines was then put into what's called an electrolyzer, which is, or series of electrolyzers, which convert that energy and take water to extract the hydrogen and separate it from the oxygen and produce green hydrogen. We'll then be taking that hydrogen and compressing it to liquefy it to provide more efficient storage on the site and reduce the number of vehicle movements. There's also support for the power system by a battery-backed system to provide power in the event that the wind isn't blowing, to keep the plant operating 24 hours a day.
So the current tech stack for the whole project, once it's all up and running, is designed to run 24/7, 365 for 25 years, I believe.
That's right. That's the plan, is that it will be able to operate 24/7.
That's fantastic.
And there's also a connection to if everything else fails, a connection to the grid as well, where we could import power. So yeah, it should be uninterruptible supply of hydrogen.
Excellent. So there's complete redundancy in the tech model, if you like.
Yes, yeah, quite.
Fantastic. And well, that leads me nicely on to the next question. Peter, I'm going to come back to you if I can. Now, obviously, the initial stage of this investment round is to raise the money to put this project through the planning permission with the local authority, who are already well aware and very supportive, as we can see, of the project. But you're taking a two-step ahead. You're already at JPFS. You're already in discussions with institutional investors, family offices, and so forth about the main project itself, which is a £125 million investment. Can you tell us what is it about this project particularly that these larger institutions and family offices are interested in? What questions they've had, and what potential do they see in the site's ability to expand beyond phase one?
Yeah, it's been interesting last 14 days, 3 weeks, where we actually had as much interest for the final project of the £125 million than we actually had for the planning permission. Everybody likes the green. Everybody actually can see that wind to hydrogen is really, really good for the environment. We can also see that the Scottish government had actually come out and say they would like to in 2030 produce 800,000 tons of hydrogen. If we look at Whitehill, that would actually be just around 0.5% of what Scotland would like to produce at the end of 2030. Now, what we tried is to make the liquidity management as good as possible for an investor. So we actually found a place where we can actually fund or finance quite a lot of the investment, which now actually have attracted a lot of family offices. Oh, when I say a lot, we only been there for 14 days, 3 weeks, right? So we're already in talk with several larger funds, several family offices that are looking to actually take the whole planning or take the whole project to the next 25 years. The way that we've done it is that we've actually found a place where we can finance it for very, very good interest rates, which means that the liquidity demand for the, I would say, for the VCs or for the larger funds or for family office makes it easier to actually enter a project like this for the next 25 years. And the calculations, what we've done is, with the way that we can finance it, the remaining of the investment looks like they will be break even of the investment within the next 5 years. And then for the next 20 years, I wouldn't call it a free ride, but that will actually have the investment paid back, and they will make the rest of the 20 years, that's pure profits. So we try to do it best possible way, also for the funds and the investment, and that actually very attractive because it's a good liquidity management. So it looks pretty good so far.
So the sort of overall financing solution which JPFS has created really enables these larger investors to get into the 125 million project for around about a third of the that actual cost. So they're not tying up 125 million, but only roughly a third of that.
Correct. And after 5 years, they will get their 1/3 investment back, and the rest, last 20 years, that is pure profits.
Understood. And actually, Richard, can I bring you back in? I just wanted to touch on the potential within Whitehill for sort of subsequent phases in development. Could you just give us a few highlights of that? What else could be done on the site once phase one is underway?
Yeah, absolutely. Yeah, no problem at all. I think one of the exciting things about something like Whitehill is the fact that is the phase 2, 3, and 4, and so on moving forward that really ups the ante as far as both the production and the profitability of the site is concerned. What we're looking to do at the moment, we're looking at a number of different options, but primarily we're looking at bringing additional energy, green energy, to the site and looking to create a larger hydrogen hub. So what I mean by that is rather than sticking more solar or more turbines on the actual site itself, bringing that in through the grid any other way that we can to the site and increasing the size of the hydrogen production and therefore the liquefaction. So we're creating a larger hub without having to create more planning permission for turbines, etc. So it seems to be the most efficient way, and we're very excited about that because that can grow exponentially. So yeah, it's an exciting option for us.
Well, it sounds like it. So then the ultimate investor in the development of phase one can also potentially participate in doubling or tripling the capacity of this site.
Ideally, we're working with people who are looking to those second and third phases, and I think we can offer them something very exciting indeed. Yeah, very much so. Fantastic.
Well, let's return, if we can, to sort of the very first stage, which is raising the money for the planning permission product. Peter, as you mentioned earlier, you're about 65% of the way there in the funding. For those people who haven't yet explored what Whitehills means and how they can participate in this initial phase, how can they learn more about Whitehill and how can they figure out whether they'd like to invest or not?
Yeah, there's 3 different ways to actually go in and look at it and see what it is. There's trademakers.com, where you can go in under investment. You can then actually look under renewable energy. That's where the presentation is there. Via there, you can actually open the account directly with SGT, which is the partner that we use for opening the account as a custodian for this project in itself. You can also go by JP Fund Services and see what it is there and go under the presentation. You can go directly under SGT Markets or sgt.markets and go under investment. And then you will be guided directly to trade makers for them to actually open an account. You'll see all the conditions there. You can open an account for £5,000 and up. So it's a very simple procedure. It takes around 3 to 4 minutes to open the account. You can take a look at it. If there's any questions, you can always write to either trade makers, JP Fund Services, or you can write to email to SGT on support.sgt.market. But it's a very simple procedure.
Okay, thanks, Peter. And for those people who didn't get to watch the first video, you mentioned already that they can invest from £5,000. How long would they expect until they could see the performance on that investment, and what is it likely to be?
Yeah, we estimate between 14, maybe 18 months to be before the actual investment is paid back. According to the estimates, if we sell it at the low range of the amount, the planning permission, the investor should be getting around 100% back on that investment. If we sell it to the average price level of a planning permission, we're looking around to 175 to 225%.
Wow, that's quite a return on investment between sort of 14 and 18 months. So hopefully you'll have more people checking out trademakers.com and Whitehill. From my side, it's been a pleasure to talk to you all again. Thank you so much for your time and for your input. Hilton, I'll hand it back to you now. Thanks again.
Thank you, Richard and Steve, for your insights on the latest developments for the liquid hydrogen project and its access via Trademakers SGT for potential participants. And we very much look forward to our next regular podcast on market views. So follow us on jpfs.com and openbusinesscouncil.org, and please engage with us on these links below, as well as on LinkedIn and Twitter, and send us questions for our next episode. So goodbye, and thank you for watching.